Hello traders, Gary Wagner here. It is 11:05 in Honolulu, 5:05 in New York on Tuesday, 15th day of August 2023, and this is the daily report for gold and silver. Traders, gold and silver continue their price decline, with gold giving up $10.70 today, or 0.55%. The most active December contract is currently fixed at $1,933.30. Today's government report revealing that retail sales increased by 0.7% in July not only took U.S. equities lower, but also the precious metals. Gold continues its downward momentum with 7 consecutive days of lower highs, lower lows, and lower closes, with today giving up double-digit losses, just over $10. More importantly, if you recall from yesterday's show, we put in a support and resistance line based on a series of tops and bottoms. I draw your attention to this lower support line that is fixed off this low in March, and then again these lows end of June, and this low here beginning of August. We can clearly see on a candlestick that today's pricing effectively closed below that all-important support line, breaking it, signaling the potential for gold to trade lower. If in fact that is the case, as we spoke about yesterday, clearly on a technical basis, the first level we'd want to look at is $1,906. That is the 38.2% Fibonacci retracement down to $1,900 per ounce, which is the low that came in at the end of June. I believe that major support is between $1,906 down to $1,888. Therefore, I believe there is a strong potential that gold will drift lower to the tune of approximately $30 before finding support. The release of last month's FOMC meeting minutes tomorrow could provide traders with additional insight. My sense is that if it shows a hawkish tone, as we expect it to, it would continue to put bearish pressure on gold. Silver declined by 12.3 cents, or 0.54%, with the most active September contract currently fixed at $22.58.5. When we look at silver, it is obvious that the amount of time that silver has been in correction, as well as the percentage drawdown exhibited during this period, is much greater than gold. When we look at this daily candlestick chart of silver, we can see that today silver actually traded well below the 50% Fibonacci retracement at $22.66. We see that fall continuing. The first level of support could come at $22.14 based on this low that came in the third week of June. Below that is the 61.8%, which falls at $21.79. Look for more lower pricing in silver in the short term. The dollar index had fractional gains today of 0.02%, with the index currently fixed at 103.08. The decline in both gold and silver were tightly tied to dollar strength. We can see on this daily candlestick chart that since the middle of July, when the dollar bottomed out at around 99 and change, we have seen it move substantially higher, now just above 103. 103.08 is the closing price. But if we are going to see a pivot or short-term move down in the dollar, which would be strengthening both gold and silver for an upside bounce, we have to look at the area of 103.28 as an area of potential resistance. That corresponds to this double top that came in July here, as well as here, as a point in which we could see that occur. Yesterday, the intraday high of the dollar came just at the 200-day moving average, which, as you can see, I've just added here. And today, we did see the dollar trade to a lower high than the previous day, but a higher low. And nonetheless, the 200-day moving average still served as a strong level of resistance. Whether or not the dollar can break above that is going to be a significant factor in terms of where we see gold and silver prices move short term. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.